Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 6:30 in New York. It is Monday, April 27th, 2020, and this is the Daily Report for Gold and Silver. A lessening of concern as some countries and some states in the United States begin to slowly phase in a reopening stage. We had a nice rally in U.S. equities. We saw oil continue to decline, and we saw the precious metals mixed with gold trading lower on the day, silver trading a little bit higher, and palladium dropping about $90. On today's show, I want to look at various support and resistance levels, and it is my sense that we could see a continuation of lower pricing. We'll speak about that in detail when we pull up our technical studies, but first to the price board. Gold futures did trade lower today. We are looking at the most active June contract, down $11.40, currently fixed at $1,724.20. When we compare that to spot, that is at $13.80, down about $14. But what is most significant is that the spread between futures and spot has definitely contracted, and we're definitely see them come much, much closer together. Now we're looking at $10+ in terms of the spread itself. We did have a mixed bag today in the precious metals, with platinum and silver trading higher. Platinum up $5.70 at $779.50. Silver also trading higher, up 4 cents at $15.30.5. Lastly, palladium lost about $90 in trading today, down almost 4.5% at $18.94.70. And that was all within some tailwinds from a weaker U.S. dollar, down about 0.3%. As you can see, for the second consecutive day, we are trading lower on the day. On Friday, we observed a simple two-day pattern known as an engulfing bearish. That would be these two candles right here. And simply put, you have the body of the last candle completely engulf the body of this green candle. Now, although these are not very large moves, they don't seem large compared to some of the larger moves we have seen in the market. Today, what we are actually seeing is a confirming candle. The confirming candle means that today we had a lower low, a lower high, and it closed below its open. So it meets all the criteria, which tells me we could in fact see lower pricing. The first price point that I'm looking at for solid support is around 1700. The market's at 1724, so that's not really that far. A 50% retracement, and the retracement that we're looking at really begins where this Three River Morning Star begins, and that's at 1575, taking it up to 1788, which is the record high for the year. It then came back down, and then we had another move to the upside. But what we are seeing is after this high here, we had a higher low, but then we had a lower high come in. We really need to see it have a higher high for us to believe that this market is still moving up. It is for that reason that I believe that we are seeing the market under pressure, and we could continue to see that. I want to take a look at a couple other precious metals markets today. Palladium, which had the greatest decline today, as well as platinum and silver. When we look at palladium, we can see that was down about $90 today. But if you compare the body size of a $90 move to some of the recent moves, and I'm speaking specifically about this incredibly long red candle, when it dropped from approximately $24.50 all the way down to $1,400, all in the period of a single week. It found some support at about $1,300, traded back up, but now is under pressure. We don't see any really solid technical support coming into the market until about $1,700 per ounce, $1697.60. That is the 23% Fibonacci retracement area. We are looking at a weekly chart of platinum. Platinum gained about $6 in trading today, but when we take a look at the big picture on this weekly chart, we can see that we've got some real resistance just above 800 at 805. That is the 38% Fibonacci retracement area. We also have support at approximately 710, and that is the 23% retracement area. Based on what we've seen recently, this bounce to the bottom and bounce back up, I think we could see platinum over time move lower. Lastly, I do want to take a look at silver. Silver is trading just above $15 per ounce, but we can see a series of highs that have come in that definitely hit resistance. We're looking at different moving averages, but they represent a week, and this line that is dashed represents the 21-week exponential moving average. We saw the top come up here. We also have our 50% retracement area. That comes in at 1643, and I think that those are the main levels of resistance we have to worry about. Now, today's move did take it just below. It opened just below and closed below the 61.8% retracement. And if, in fact, we see lower pricing, on a technical basis, the first real level of support doesn't really come in till about 1450 to 1460. Traders, maintain your neutral stance. We have no active trades in either gold or silver. We will remain flat until we see the dust settle over the next couple of days. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.